Thanks for tuning in to another episode of My Next Property. My name's Steve Ash. I'm the founder of Property Strats. I've got an $80 million portfolio and I'm an ex-vice president at Goldman Sachs. I'm joined here by Tommy Clark. How are things?
Steve, pumped to be here, mate. Thank you for having me. And bloody Burley's put on the weather again.
Oh, it has, hasn't it? It's just absolutely boiling hot out there. So we've got the air conditioning sort of like screaming in here. We've had to turn it off because the papers are going everywhere. But it's absolutely, we've really put on the sort of like weather for you.
It's a beautiful place, isn't it, really?
Oh, yeah.
It's unbelievable.
It's absolutely stunning, yeah. It's just a beautiful neck of the woods. The beaches are good. But we're not going to be talking about this area today.
We're going to do an episode on it, though. We spoke about that before.
We are, yeah. No, it's an important market. Like we've obviously done the episode, we talked about the Olympics and we can talk about the Olympics.
From it.
Yeah, Gold Coast can do well. But now while we were talking about the Olympics, really the price points that we were looking at there, where it's sort of like that $800,000, $900,000 mark plus, maybe a little bit less if you've got a unit. But here, what we've listened to some of the questions that we're getting, and we're going to look at affordable suburbs now. So we're going to go 550,000 budget. It sounds crazy when I think 10 years ago where kind of like 550K is cheap, but that's how much prices have moved. So we're looking at cheapy type of areas and we've got a cracking sort of episode for you here and I'm going to throw over to you. So 550,000, what area are we going to talk about
Mate,
here?
So we're getting a lot of interest from our clients on Bendigo and something we've been talking about for some time, you and I. I've been a big believer in Bendigo and if you look at, it's just been such a solid performer over a long period of time. I think the average historical growth rate's been between 8 to 10%.
8 to 10%.
So it's really a really strong market.
Yeah.
And when we talk to clients around their strategies, I like to talk about pulse markets and anchor markets. And anchor markets are larger markets where you can feel quite safe in, that you're going to get good, reliable growth year in, year out. And to get that, you need a good foundation behind the market to drive that growth, right? And I see Bendigo as being one of those as well. Even though it's a regional market, it's got such strong fundamentals built within it.
Yeah.
And it's had consistent growth and firmly believe it's going to continue on moving forward. In the next 2-3 years, I think it's really going to outperform. But even beyond that, it's going to provide good, solid, high single to low single digit annual growth rates. So Bendigo is a regional city within Victoria.
Yep.
So it's about 150 kilometres from the Melbourne CBD.
Yep.
It's connected by the main freeway and the railway line, the regional rail link is connected directly into Melbourne as well. And we'll talk about the investment that's been made on those sort of things in a moment. But it's a growing hub and more people are moving there. Economically, it's a powerhouse. I think the council, I was reading yesterday, the council budget they've got for infrastructure in the next 12 months, just under 300 million.
Okay. Well, there you go.
Right. Big numbers.
No, big numbers. Okay.
Yeah.
I mean, it sounds exciting, 550K, but are you actually seeing people, I mean, that sounds like a long way for me. In England, so like 10, 20 miles to commute anywhere is a long way, but are you actually seeing people commute in from Bendigo?
Absolutely.
Is the local economy diverse enough to have enough jobs there?
Absolutely, there is job growth happening, but there's also people that live there that commute into Melbourne. We've got a suburb we'll talk about where a lot of those commuters that move to Melbourne from Bendigo live. And in fact, we bought a cracking deal for a bloke called Big Jack. Shout out to Jack. I told him I was going to mention him on today's potty and we'll talk about the deal. We've just cracked him over the last week or so. He's absolutely pumped. Amazing opportunity.
Exciting
huge discount
stuff
on the way in. And that's just set his whole portfolio up for massive growth moving forward. So, Jack, you're onto a good one there, mate, and I'm looking forward to doing number 2 with you. But look, let's start with the economics of the market, right?
Yeah.
Because we know everything is driven from the economics. And ultimately, you want a good economy, but you don't want it to be driven by one market or one segment, right? This is a diversified economy. There's not one industry segment that represents more than 20% of the overall growth or economic value of the overall precinct, right? So it's made up of large degree health, huge hospital in Bendigo. There's been just under $1 billion spent on that, $1 billion, right, over the last 5 years. Why do they build hospitals, Steve? Why do they want to improve hospitals? Steve, talk to me. Because population growth. There's more people moving there. They want to support that population and give it the services that it needs. So medical and health is huge. Finance, Bendigo Bank, there's a huge financial sector that sits around that. In fact, Bendigo also had its own stock exchange at one point in time. Yeah, being an old banker yourself.
Yeah, I didn't know that. There you go.
I didn't know that. It's been acquired by some Sydney.
BSX, was it?
NSX, I think it is. It's now been acquired by, but it was named the Bendigo Stock Exchange from memory, but it's now acquired by some Sydney. And it's for smaller startup type businesses that want to get access to public markets. Anyway, we digress.
Wasn't there like a commodities boom there at some point? I can't remember. Yeah. Or it might be Ballarat. Sorry.
Not so much gold these days, but gold was huge back in the days, you know. It's got significant construction sector, retail sector, and services. So across the board, there's heaps of different industry types. They all demand jobs, and jobs equal wages, and wages require people, and people require shelter. So that's going to continue to support that. But the biggest thing is, so we look at the economic diversification, which is one metric, right, in terms of before we enter a market. We've clearly outlined that. Very, very strong. But in terms of the GRP, gross regional product, like the growth of it, in 2019, it was producing just under 8 billion.
Yep.
Right? In GRP. 2015, guess what the number is?
I wouldn't have a clue.
Put you on the spot twice now, haven't I, big fella?
You have. You know, I'm lost for words for a change. Yeah.
Just under 11.
11. Okay.
Just under 11, right?
So we see decent growth. Yeah.
Between 2019 and 2024, 25, not double, but geez, you're getting to some big numbers there, right?
Yeah.
And so that's growth.
Yeah.
That's more people. That's more dollars. It's more house value, right? So phenomenal stat. If you look at the unemployment figures, again, very, very strong, around 4% unemployment, okay? So that figure's a good figure. And net migration and net inflows from capital cities, not just from Melbourne, but from all capital cities into Bendigo for the 12 months to March, year on year was up. Guess what the number is, Steve?
2%.
No, 260%.
260%?
260%. Right, year-on-year growth from capitals, city population into Bendigo. It's growing year-on-year by 260%.
There you go. That's phenomenal.
How many beers? I know you don't drink beers, but does tea do something too? Where'd you get 2% from? Anyway, it's a big number. And look, you collectively, you bring all those together, it's a great market to be in.
Yeah.
Right?
So, I mean, that's a good sort of overview for Bendigo. So you're selling me here. I think there's obviously a good play here. So I'm going to put you on the spot then.
Yep.
Because you've been putting me on the spot. 2 areas then, 550. Give me 2 suburbs.
Yeah. Okay. So we've got 2 suburbs. We're going to talk about Eaglehawk and Kangaroo Flat. But before we get to that, let's just look at the broader Bendigo market. If you look at the 3-month rolling price average across the board in the entire greater Bendigo area, we're really starting to see it pick up, okay, over the last 3 months. The days on market are really starting to trend down now. On average, it's around 35 days across the broader market. Obviously, different areas have tighter numbers than others. Now, building approvals is another thing to look at, right? And it is running at 1.6% of available stock, building approvals.
Yeah.
Right. And we also, just because buildings get approved doesn't mean there's heaps of supply coming down, because there's all sorts of things that need to happen once the building gets approved, as we know. And rentals and yields are going up. So over the last 12 months, the rental yields grew by nearly 7%. So typically, as we all know, yields between regional and metro are typically higher, and it's no different in the Victorian markets. The yields in Bendigo on average are around 4.8%. I think in metro, Steve, we're getting around high 3s, low 4s at the moment.
Yes, correct.
Yeah, there you go. So it's a high cash flow play. And if you look at the yields on all of the major regional precincts, Geelong, Ballarat and Bendigo, they're sitting between 4.5 to 4.8%. Okay, so across the board regional in Victoria, you're getting better yield in those markets than you are in Melbourne. And also, as Melbourne grows, and Melbourne will eventually get to that point where the affordability will start to get into an area where it starts to push people out, they're going to move into these markets as well. So they'll typically fire a little bit after the Melbourne market, which is already, as we know, going really, really well. So in terms of breaking things down, let's move to Eaglehawk. And
just one quick question on that. What did you have the vacancy rate there?
The vacancy rate across the entire Bendigo market is around 1%.
1%.
And I think you were saying before the pod, Melbourne's too.
Yeah. Most areas are like that, low 2s. And so what we're seeing with clients of depending on the properties, like we're seeing a few weeks to rent out. So this is going to be quite attractive, like good price point, good yield and a very tight vacancy. And so this is all kind of stacking up quite nicely at the moment.
And what a balanced market typically is
about
3%. 3%, right?
Yeah, I mean, historically it's been 3%, but I think given what we've seen in the markets now, I kind of go off that 2% figure and say with investors coming to the market in Melbourne and likes of Werribee, Hoppers Crossing, for example, because there has been quite a lot of buying, a lot of focus from buyers agents as well as investors.
Yeah.
But that kind of vacancy rate has topped. Frankston is a classic. Like this time last year when we were buying there, vacancy rate was 0.9, but now it's kind of, I believe it's up to 2.
Yeah, well.
But what we're seeing is clients like who do, and investors in general, it's not just clients, but it's just seeing if you've got a price, you've got to get that rental price right, because if you don't, it is going to sit on the market for a while. So it's very important to have a good agent and set your rent right. But for those people who kind of maybe got that tight budget, household income's a bit, tight, and you don't really want to see your property vacant for a while, but you also want to get a good rental return. And Bendigo's ticking a lot of boxes here is what I'm hearing from you.
Absolutely.
So yeah, let's talk about these suburbs then.
Yeah, no, thanks, Steve. So Eaglehawk is a suburb around, I think it's about 6 kilometres from the Bendigo CBD. It was typically a gold, very, very much a gold mining suburb, and it was actually detached from the Bendigo city back in the early 1900s. Anyway, I don't want to become a historian here, but now obviously it's part of the Bendigo market. And the last 12 months, we've seen some good growth of just under 10%, right? So the market's starting to kick in this area. And look, typically as a business, we don't just rely on statistics, as we all know. Like, statistics tell a part of the story, but always we're in the market, visiting these suburbs, understanding them, living in them for a period of time before any clients are put into them. And again, Eaglehawk and other markets that we're in Bendigo, you can just see things are starting to happen, right? So the average price within Eaglehawk's around $530,000, grown by just under 10% over the last 12 months. And the yield is against the average of Bendigo, similar, it's 4.8%. But the vacancy rate's under 1%, right? Wow. So if you do have a property and you're looking to rent it, it's going to get snapped up really, really quickly.
God, that's big growth, 10%.
Yeah,
and you've got one yourself. Is that an Eaglehawk? Or?
No, I've got one. So the best performing suburb over the last 12 months, a suburb called White Hills, that did 19%, just under 20%. And I've bought several in White Hills myself.
Oh, yeah. There you
12
go.
months ago. So that was good.
Beers are on you then.
They are,
or
indeed.
the teas.
Well, yeah, teas or beers. I'll have both these days. Look, I've been in White Hills. I like Eaglehawk and I like Kangaroo Flat a little bit more now. I think particularly Kangaroo Flat, and I'm jumping the gun here by getting...
Spoiler.
Yeah, exactly.
Yeah.
You spoilt me, Steve. But Kangaroo Flat, I do like. I think that's going to outperform almost every suburb in Bendigo over the next 12 months. So, mate, you've heard me here. You hold me on that.
I'm going to hold you that. Yeah, it's 6 months or a year's time. We'll have a reminder. But if we're getting like that 10% sort of growth, or if you can replicate that 19%, or was it 19% in White Hills?
In White Hills, yeah, exactly.
Yeah, I think you'll be happy. Yeah,
exactly. And if you look at the rolling average price over the last 3 months in Eaglehawk against the average rolling price across the broader Bendigo region, Eaglehawk's starting to outperform, or it is outperforming, right? Essentially, the metrics that we look at are really pointing to buy signals in this market, and fundamentally they've got what we need in those markets to support great short, medium and long-term growth. So Eaglehawk's a good one. The market absorption rate is also very, very statistically strong, up near 30%, which is a very strong market, right?
Yeah.
But again, fundamentally, people will want to live there because it is an owner-occupier type village, sort of an atmosphere that sits within Eaglehawk, that if you buy in there as an investor, typically what I always say, you want to sell it to an owner-occupier.
Yes.
That's where you can eat out additional capital growth by tapping into those emotions, and this is a market that will allow you to do that. Boom!
There we go. So for the people listening, could you give an example of a deal in Eaglehawk that you've seen or you bought recently that looks good?
Yeah, there's a few deals. I'll give you one. I've got a good one to talk about in Kangaroo Flat. We can do one in Eaglehawk if you want, but I'll talk you through the Kangaroo Flat one if we can. And let's go through that suburb.
Okay. All right. How about we then we just move on to Kangaroo Flat? We'll go through that because I'm rushing you here because I want to hear about the deal, obviously. But let's talk about Kangaroo Flat and then we can get into that. Cool.
Okay. All right. No. So Kangaroo Flat is southwest from the Bendigo CBD, so the opposite side of where Eaglehawk is. It's around 5 kilometres from Bendigo CBD, I think.
Okay.
Don't test me on that. Now, the growth rate that's experienced over the last 12 months is about half of what Eaglehawk has experienced. But if you're looking at the data and the metrics that we look at now and the rolling average 3-month average price points, you can really see things starting to change. And that's as we're looking at what's going on the ground in Kangaroo Flat, looking at the population growth that's occurring into this particular area. It's a much larger precinct or area than Eaglehawk is. I think the next 12 months, that previous 12-month growth is going to change dramatically when we look back in 12 months' time. So things are starting to move quite quickly in Eaglehawk. Again, the vacancy rate's really, really strong, under 1%, and the days on market are really starting to compress quite quickly now. So back in January, it was around the 40 days. Now it's just under 20. So
Really?
and that graph's really starting to shoot downwards quite dramatically now. So very, very confident on that market. Now, the other thing I like about it is its proximity to Melbourne. So it's essentially, it's on the train line. So Kangaroo Flat has got a train station, and that's essentially the last station within Bendigo before you depart Bendigo and you move on to stations outside Bendigo on the way to the Melbourne CBD. Okay. So what I'm saying there is there are a lot of people that are wanting to move into Bendigo. Typically, if they work in Melbourne, they'll like to live around that Kangaroo Flat area a lot of the time. And that's just a little bit of a kicker you're going to get in that market because of that extra indexation against population growth compared to other areas within Bendigo. And, the regional rail link is such an important thing. There's $5 billion been spent on that over the last 5-6 years, $5 billion from the Victorian government. And what that essentially means is that it just frees up the traffic flow from the rail lines into the Melbourne by breaking up the Melbourne rail line from the regional rail lines.
Yep.
So they've done that, invested $5 billion into the regional rail links from Bendigo into Melbourne, from Ballarat into Melbourne, and also from Geelong. And fundamentally, we're bullish on Ballarat and also Geelong, and we can talk about those markets, but ultimately Bendigo is probably the pick of them at the moment, and that regional rail link's really, really driving a lot of that growth as well.
Yeah, no, it sounds like we've got a couple of hotspots for sort of like other episodes. So that's pretty exciting to get into that. Anything else about Kangaroo Flat?
No, so look, that's pretty much it. So we got a cracking deal for
of course,
a great bloke. His name's Jack. He's a school teacher, and him and his wife are really looking to use property to grow their wealth and expedite that process to retirement. So we got him. It was a great opportunity. Low fives, really beautiful street. It's high owner-occupier suburb anyway, up near 80%. Socioeconomically, it's quite strong also, but this was in a really nice pocket and a really nice street, and the house was just a beautifully built, well-maintained house. He'll never have an issue with it, and we got about $40,000 off the price. Going into the deal, and it was a deceased estate. And we actually picked it up before the agent had actually done the contract with the vendor. I mean, we're very close with these agents in these markets, as you know. They come to us pretty quickly, and he gave that to us before he'd even signed it up. So it was pre-market, and we got a great price. No heat in the acquisition because never went to market. And Jack's very, very happy. He's got a great asset now and a good equity position to start moving into his next, which is what his intentions are now. So it's awesome.
Was it 4-bed, 2-bath? Or
4x2, yep.
4x2.
Just under 500 square metre block.
Yeah.
Block's a little bit smaller in that area. Only owned by the single family over the entire lifetime. And it was just beautifully laid out, beautifully manicured gardens, really well maintained. Just a set and forget asset that Jack doesn't have anything to do with it. And he'll just let the market do the heavy lifting for him.
Yeah.
And we'll call him in 6 months' time, and I'm sure I'll give him a big
rip out that equity.
On the equity gains that he's going to get. So he's gotten 40,000 on the way in, right? Now, if I'm thinking this is going to do double digits over the next 12 months, you've come from Goldman Sachs, big fella. You do the numbers, right? You
Goldman Sachs or Goldman?
Sorry.
Sounds like a cereal box, but no.
Mate, I'm no banker. But anyway, you do those numbers.
But that's what we're kind of looking for. It's so important to make money going into the deal, having that sweat equity factor, buying at the start of a cycle, and then riding that because you've got the organic growth to come. And so you've got the best of both worlds there. So I bet he's at, and the rental return, what would this rent for?
It's a 4.8% yield. So I think
about 480?
500 per week on the higher range. But
Okay.
480 to 500. Yeah, exactly. And vacancy rates at less than 1%. So you'll pick up someone very, very quickly.
Yeah, that's awesome. Well done, Jack.
So, and maybe we'll bring Jack in. He wants to go 4 or 5 deep, and we think we can get him there pretty quickly. So we'll bring the big fella in and he can talk about it himself, hey?
Yeah, no, it's exciting. Yeah, there's a number of other ways to look. And actually probably that pulls us towards the end of this episode. So I'm going to ask you for some sort of some action steps and what people can implement on the back of this. Obviously, we've talked about 2 good areas. We've talked about Bendigo. I want you to give maybe myself, because I know you like digging into me, a reality check of regional versus metro investing. Yeah. And so something like this, it makes total sense what we talked about, but maybe some action steps from yourself, what someone listening to this can do about Bendigo and get started if you're good to do that for me.
Look, I think just don't discount regional locations, right? And I spoke about the pulse markets before against anchor markets, and you've got regional markets that have both. But, you've got Bendigo, which is such a strong market. It's done good growth in the last 10 years that's, that will stack up against any market across Australia. And we think it's going to continue that moving forward. And so consider them. When you get a deal presented to you, consider them because these are great investment opportunities. And typically in terms of your portfolio structure, obviously you're going to get a little bit higher yield in these markets than you will perhaps in the metropolitan Melbourne market. So think about that from a cash flow perspective. If you've bought into Melbourne and you need a little bit more cash flow, then definitely think about Bendigo as an opportunity to build that into your portfolio to get you to your next one. So
and I think it's also good from a portfolio construction point, and you touched on that. But if we do know that if we keep buying sort of properties to your point at 3.9 or 3.5%, we're going to tap out serviceability really quickly.
You will.
And so if you do have a lower budget, you're going to get capital growth, especially if you buy well. But then if we are thinking about properties number 3 and 4, let alone number 2, this will set you up for that. You will get your capital growth. You'll get your serviceability. And so it's got the best of both worlds. And obviously with these, we're talking at a suburb level here. So obviously with a deal, you can actually make a lot more of that. If we look at, say, Perth, and you're buying, say, a similar sort of deal like in Perth in 2021, if we kind of forward now, that purchase price is always locked in. But if we look at the yield on purchase now, in many cases it's 7-8%. So I suppose like with the numbers that you've given me with the vacancy rate tight, we're going to see rental growth. So something like this, do you see sort of like yields on purchase maybe around that 6% potentially in 2 to 3 years?
And well, don't forget, I think I gave you the stat before. I think the yield growth has been on average around 6% rental growth.
Well, there you go.
Over the last 12 months, right? So
you're going to get that.
Yeah, and you look at the supply, right? 1.6% approval rate against the available stock, Steve.
Yeah.
Right?
Yeah.
Then you look at the population growth from capital's inflow into Bendigo, 260% year on year, right? These numbers are strong. So it's a good market to consider. And also in cash flow, what we're starting to talk about more is commercial. And there's good commercial opportunities in the Bendigo market as well. And we're actively buying those across industrial and retail assets. You're buying to always look at commercial opportunities in these types of markets because they're good, strong economic hubs and they've got a need for both industrial and retail assets. Yeah. So we're doing those as well.
What sort of price point to get decent commercial in Bendigo? What would you say, like, to pick up those yields? I suppose that's how long's a piece of string, basically. But if you had, say, a 1 mil budget to 1.5 and you wanted to buy a commercial asset, that gets you something pretty good in Bendigo?
You could get something for 1.5 in Bendigo, you get a good asset. Yeah. And again, it just depends on the budget. I always say to commercial clients, the more you've got, the higher above the clouds you can flow in terms of where the competition sits, the better the deal you're going to get. Awesome. And don't forget the difference between commercial and residential. You're talking about a net yield outcome against a gross yield outcome on residential, right? So the costs for your commercial asset are burdened generally by the tenant. Yeah. So the only real costs you've got to hold that property is your debt against the bank.
Yeah.
Your bank debt.
Yeah. No. And I think we've talked a lot about this. I mean, we're going to be doing some commercial masterclasses from yourself pretty soon. Yep. And I'm very excited to sort of hear about all of that. So commercial opportunities in Bendigo. So I'm going to break this down, some really good action steps there. So Bendigo, a lot going on there, seeing great deals on the ground, kind of covered, or you've covered, I'm going to say, I'm not going to take your credit here. So we've covered Eaglehawk and we've covered Kangaroo Flats, 2 really good opportunities, very good price points, really good ones to put in the portfolio. Now I'm excited. I'm happy to go into Bendigo myself.
Let's do it.
So any other sort of last minute sort of tips for anyone about Bendigo, something that, that you can just impart before we get into the birdie life with the tea shops?
No, look, I think the closing comments would be it's showing some really good signs at the moment, and we think there's going to be some great capital growth over the next 12, 24 months particularly. And good opportunities are available to get into that market. So think about your portfolio, think about how you're constructing it, and just think about Bendigo as a potential alternative. We do want to do Geelong. We think Geelong obviously clearly, as well as Ballarat, but Geelong is great, represents great value at the moment as well.
I'm a massive fan.
So we're going to do one on Geelong over the coming weeks and look forward to getting stuck into that. So.
Yeah, no, I'm a massive fan of Geelong. But yeah, I've learned a lot about Bendigo today. I'm sure everyone else listening too. So thank you for doing this, Tommy.
Thanks, Steve.
Good to have you here as always. So next episode, we're going to put this together. So Tom and I, we've got a bit of work to do before we do hit the nightlife, I should say, in Burleigh, and a couple of old fuddy-duddies like us. But we're going to, next episode, we're going to be revealing.
Talk about yourself, please.
Okay, all right. One fuddy-duddy. So the next episode, we're going to reveal the portfolio construction system that helped create an $18 million portfolio. So we've got a lot of work to do on to sort of unpack this, but very excited to do that as our next episode. But as always, thank you, Tommy.
Thanks, mate.
Cheers.